Hey, rates have just hit a 2-year low. You've been waiting for it. It's now here. People have been saying, just like you, I'm waiting for rates to come down. Well, here we are in the 6.75 to 6.5 range, and there continues to be a little bit of downward pressure. So I'm going to talk in a moment about what you could do. You have two options as I see it, but I'm also going to discuss a strategy that you could use to reduce your overall debt load using a mortgage. So you want to stick with me through the whole thing. I'll make it quick for you. Number one is you could wait and say, well, maybe they'll come down further. But just be aware that it's been proven time and again that for every 1% in rate drop, you get about 5 million new buyers in the marketplace, nationwide, of course. So that means loads more competition as the rates drop, which then puts that upward pressure on pricing, very often just eliminating any gains that you've made or even making it more expensive, even with the lower rate. So just something to think about. Or you could, of course, capture the home that you want now if it fits the lifestyle you want, at a payment that you could afford and that makes sense for you, and with refinances available later on. Which leads me to the conversation I want to have about refinances. You may, like so many Americans right now, we have over $1 trillion in credit card debt, be carrying loans that are in the 20% plus range in terms of rate, particularly credit card rates. You might have student loan debt, all of which could be well in excess of a mortgage rate. Now, even this would be true if mortgage rates were still at 8%, but here in that 6% range that we're now in, that mid-6 range that we're in, you could use a mortgage, a refinance. You could use a home equity line of credit. There's a lot of different ways to go about it, and of course, just reach out. We'll connect you with a resource that could give you the right path for you. But imagine taking that 25% credit card debt that you're holding month over month and eliminating it by loading it into a mortgage, whether, again, that's through different mortgage vehicles, refinance vehicles that are out there. Point is, even that higher mortgage rate, your overall debt payments are going to drop based on potential other debts you're carrying, such as consumer debt. So if you want to carry the conversation now for your particular situation, or just want me to connect you with my most trusted lender, please reach out, reply to this, and I'll make sure that I do that for you. I'm Dan Beer with Beer Home Team, eXp Realty. I'll see you in the next video.